Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani. Voice okay?
Yeah. Till now it's okay. Let's see.
All right, there you go. It's a good Friday from that perspective. It's a good Friday for the equity markets as well, because that little hiccup that you saw at the start of the day proved to be just that, a hiccup. And we've moved quite substantially higher. In fact, we're trading with gains of about 0.5% for the benchmark Nifty 50 right now. And it's looking like at this juncture, I don't want to jinx it. It looks like it's going to be a good week. The broader markets are looking even better, if anything. And you have the mid-cap index that's gaining about 1.1% at this point. You have the small-cap index that's up about 1.6%. And boy, a lot of you are going to be happy at the end of this week looking at your portfolios. A lot of you will have had significant recoveries as well, because while the benchmarks and these indices have moved higher, you have a lot of individual names that have crept up, if you can call it that. And you may not have noticed how quickly they have recovered some of the losses that they had. Bajaj Finance is one of the big talking points of the day. Of course, it's gaining about 2.5%. The key overhang with regard to the management has now abated. Rajiv Jain has been appointed as vice chairman and executive director, and it will be an executive role. And his deputy is going to take charge as managing director. And this is one of the key stories. Manappuram is the other story for the financial space, where Bain Capital is acquiring controlling stake, and the stock is up as much as 5.8%. That's because of the agreed upon price, which is above this price as well. And so that increase in the stock price is reflecting that. However, bear in mind that there's likely going to be, once the management change occurs and all of that happens, a couple of quarters where cleanup is anticipated. And so the terminology that they use in the financial space is kitchen sinking. Because the word comes from, by the way, you throw the kitchen sink at something, right? Okay. So you basically are getting rid of certain assets that you don't like. And that usually occurs when there's a management change in a bank. You see a lot of public sector banks, when you had the period of change and period of asset review and all of that was taking place, every time a chairperson changed, you had kitchen sinking taking place. And now you have asset quality that's significantly better. But what else stands out to you?
Right. So a lot of stocks, as you rightly mentioned, it's a hurrah when it comes to the broader end of spectrum. And there are counters like Jupiter Wagons, Hindustan Construction, there's Tejas Networks, which is up and above in trade and almost 15% up now as we speak, 16% in fact. Jupiter Wagons is another counter. JM Financial, buzzing on the back of news, up 10%. There's Nuvoco Vistas, which is also up by around 10-odd%. Raymond Limited is seeing an upswing in trade today, up by about 8-odd%. There's Titagarh Rail. A lot of rail counters, in fact, are buzzing today. There's Jupiter Wagons, there's Titagarh. All of these counters are picking up. Railtail Corporation also buzzing in trade. So it's the broader end of spectrum where the real gains are being witnessed. There are also some counters which are seeing pain, but the pain is not as much as the gains being made in the broader markets right now.
And the other story which I failed to mention, Mahima, is the IT pack.
Yes.
Let's pull up the Nifty IT, because what a recovery you've seen intraday. It started off with sharp gashes of 2% or so on the benchmark level, but it's trading with gains of about 0.4% right now. And everything from I would actually say the smaller cap IT names, Persistent, Emphasis, have made a sizable comeback. The only stock that is trading in the red on that index right now is Infosys. Sameer Dalal is with us this morning, Sameer of Natweb Dalal and Sons Stockbrokers, and we will soon be joined by Jatin Gedia as well of Sher Khan. Sameer, good morning to you. And before we start with the questions, a couple of very key stories today, right? There's IT, there's Bajaj Finance, and there's Manappuram. I want to focus on the first two. Would you be a buyer in Bajaj Finance, and would you still hold your horses? It may not be as bad as some people had anticipated this morning on account of the Accenture update, because of the issue that they're facing with the government contract. But it's not a rosy picture either, right?
So we've not been positive on IT for some time, not because of the fact that Indian IT companies have exposure to the US government, but the fact remains that if we are looking at US maybe going through a bit of a slowdown phase, I'm not saying they go into recession or anything, but if they go through a bit of a slowdown, the easiest way we've always said for companies to cut some of their spends in these difficult times is to reduce their IT spends in the short term. So that would affect companies in India who are doing the offshoring business. And we felt that, anyways, companies that are growing the top line anywhere, it's mid to high single digits and trading at 30 times valuations was unjustifiable. So we've been holding a slight negative view, and that view doesn't change because the negativity regarding growth still persists. Plus valuations, yes, they've come off, but they're still higher than what, we are trading above PEGs of 2 even as of today. So from that perspective, the probability is that even though they may not correct much now from here, from these levels, because the stocks are already down, you will probably see a period of pain where the stocks underperform the broader markets. So from that perspective, I'd much rather buy something else. When it comes to Bajaj Finance, which is a completely separate entity and business unit and business model, so I think the India opportunity, especially the model that Bajaj Finance is working on, is still got a huge opportunity to grow. Yes, consumption is going to get a boost, and some amount of savings that are going to come. So maybe in the initial stages, the loan growth may not happen because people already have a little more money with them thanks to the tax breaks. But eventually, if you move up the value chain and buy higher ticket items because of your savings and you take an EMI against that, I think the opportunity for Bajaj Finance is still strong. Problem simply, valuations have run up far too much. I think if the stock corrects by another 10 to 12%, maybe it comes into, I wouldn't say fair range, but more, a range where I could probably generate a 15 to 18% CAGR return on my investment. So I'd wait for a correction to buy a Bajaj Finance. But if you're already invested, stay put because the growth opportunity is still very strong.
Right. So wait for correction in Bajaj Finance, and IT still not looking cheap where valuations are concerned, is the view coming in from Samir. Moving on to our first caller for the day. Ajay from Ambala is calling in. Ajay, a very good morning to you. कैसे मदद करें आपकी? Hi Ajay, can you hear me? Okay, I think we've lost him. I'll take the next query. That is from Dr. Rajiv. He has 400 shares of SBI cards at 802 a piece, and he wants to buy more. He's asking, should I buy more or can hold for the next 2 years? Samir, I'll stick with you for this question. SBI cards, what's the view like?
So we are positive on SBI cards. The stock has underperformed over a very long period of time, and rightfully so because the delinquencies have been increasing in the book. But you also got to realize that SBI card makes most of its money by people paying the minimum amount due, and which allows them to earn the high interest rates, defaults, and then when the recoveries happen, that they earn the bigger chunk of their profitability. If people pay all their credit card bills on time, SBI card would actually struggle to make too much money because they're funding the money up front without earning too much on it, because the spend amounts that they get, which they have to split with the Visa or Master or Rupee or whoever, doesn't bode too well. And plus, they have their internal cost structure. So I believe the opportunity still, Raj. India still has, how do I put it, little less awareness on how credit cards should be used. Until that unawareness is there, or that lack of awareness rather is there, I think SBI cards will do well. Valuations are cheap. And the penetration of card market is also still very low. So the growth opportunity for SBI cards is still quite strong. And you probably over a 2-year period could make good returns. We have a view of about 1,000, maybe in a 2.5 year period. So continue to hold, and corrections keep adding.
All right. So that's a view on SBI cards. We've got our work cut out for us because our role, of course, is to educate you on how to manage your credit card spends. But let's go to our next caller. A. Mohan is calling us from Warangal and asking about Transrail lighting. Hi, Mohan. How can we help you today?
Hi. Good morning, sir. Good morning.
Good morning. Please go ahead.
Sir, I want to know that when I have to enter, at what price I have to enter this Transrail lighting.
Okay. Why do you like this company?
It is in the transformer and installing the transformer.
Distribution,
and,
transmission. Correct.
Transmission system, and it's having orders from the abroad also, Africa.
Got it. And by the way, Mohan, in case you missed it, we spoke with the management of Transrail Lighting on India Market Open, which was the previous show before this. And, you should look at the YouTube channel and perhaps catch that interview. In the meanwhile, Jatin, I know that I've kept you waiting for some time, but this is a relatively new listing and I'm quite sure that you don't have enough data on this. So let me go back to Samir on Transrail Lighting. Do you have a view on this, or would you prefer another name in the T&D space? Since he hasn't made a deployment of funds yet, would you suggest that he can look at another company in the transmission and distribution space?
So always there are companies in the transmission and distribution space where I don't know what exactly Transformer Rail does, so Transrail Light does, so I don't know. But if you're asking me in the transmission and distribution space, there is KEC, which is, we think, a good opportunity, apart from the opportunity that lies because of the increase in distribution where they figure in doing the construction activity. The stock has seen a decent correction. It comes from a decent parentage group. We believe the opportunity there can be quite strong, and that is one of the stocks that we have a recommendation on with a target price of 1,100.
Target price of 1,000?
100.
1,100. You know what? Let me get Jatin's view on KC as well, because it's up for another day. And let's pull up the shorter term time frame, right? Let's pull up maybe so far this month. Can we do that? Yeah, okay. Or this week. Look at that. Wow. 4%. Just look at that. 24% over the course of this week. Jatin, what is the initial resistance that it is facing, and what is the potential upside on the technical charts?
Yeah, see, on the technical charts, what we expect is the initial level of 900 can act as a resistance. However, we believe that this rally is likely to extend towards 947 on the upside. So 947 is the 20-week moving average till where we are expecting this rally to continue. So considering that we have already seen a sharp run up, it will be advisable to buy on dips. The crucial support for the stock is placed around 820. So a dip towards 820 should be considered as a buying opportunity. On the upside, 947, 950 is our price target for the stock.
Interesting. So 1100 is the target as per the fund, where fundamentals are concerned. But Jatin has given a target price of 950, and buy on dips should be the strategy for KC International. Moving on to the next
depends
counter.
on when you get those dips.
Of course. And hopefully we shouldn't get those dips now, all right. The next counter that we're talking about is Netweb Technologies. Sangamesh from Bengaluru is holding 100 shares bought at 2,550 a piece. He's sitting on a loss of 98,000 rupees right now. And he wants to know whether he should average out or sell at the current levels. Jatin, I'll come to you again. What are the charts looking like for Netweb Technologies?
See, in the case of Netweb, I think there has been a base formation in process between 1400 and 1500. I think that process is complete, and now the stock is poised for a move towards 1800 to 1900 odd levels. So I think current levels are good levels to even add to the existing position. I think there is a scope for a sharp upmove towards 1900 from a short-term perspective. So yes, you can continue to hold and even add more at current levels.
Hold at current levels is the view coming in on Netweb Technologies. We have Dheeraj calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Titagar Rail.
Okay.
I'm holding 150 shares of Titagar Rail
at 945
rupees.
Right, okay.
Yes, 945 rupees.
Okay.
So, could I add more at current level as there is a fresh breakout?
Okay, so Dheeraj, just to get the question right, you've seen the technicals, if I'm not wrong, for Titagar Wagon.
Actually, the share hit an all-time high of 2,000 rupees.
Right.
So it has almost corrected more than 60%.
Okay.
As of now, but as in recent budget there is no proper allocation for railway. Like there is no increase, or as per the expectation, all the railway stocks corrected even more.
Right.
So is it a correct opportunity to grab it and add more at current levels? Is my query.
Got it. Got your question, Dheeraj. Samir, I'll come to you. It's not just Titagar wagons, but we're also seeing an uptick in trade today where railway counters are concerned. Jupiter Wagons is also buzzing in trade. There's also a question that we have on RVNL. What's your view with respect to railway stocks? Because these have been beaten down in the past few months. Do you think this is the right time to enter, or valuations are still looking expensive?
So valuations have definitely corrected, right? So valuations have probably become absurd during the run-up, on expectations that there would be a continuous spend by the government which would keep increasing. And let's be honest, it's not like the government, the person asking the question asked that there's no specific target to the railway. I think there is. They have given an increase to the railway spends. So we believe that the opportunity is going to be there. The government is going to continue to add more rail lines. They're going to keep adding more trains, more routes. They're going to improve the safety mechanism. So the entire opportunity of the railway still persists. This correction has been sharp, and Titagar, like he rightfully said, has corrected by about 50%. I think the high was around 1800. I don't remember it at 2000, but it's corrected quite sharply from the top. Even after this correction, valuations are about 30 times trailing earnings. And if we take some amount of growth, I think the stock is trading at about 27, 28 times current year. And if we go 1 year forward, it's trading at probably close to 24 times, which is not expensive. So I would advise the person asking the question and your viewer that go ahead and add some stock at these levels. I think the correction is good. I think the company is doing well. The fundamentals are strong. And over the next 2 years, you will see the railway spends continue by the government. Government infra is not going to slow down. And you will ensure that the stock will probably see an up move, probably not to 1800, which was unjustifiable. But yeah, I mean, definitely you can expect a 15% CAGR returns from here, or 15 to 20% CAGR returns over the next 2 to 3 years.
Okay. Ordinarily, I would ask about RVNL as well, but we've got a caller from Michigan in the USA. Ram is calling us. Ram, thanks so much for calling, and I don't want to keep you on the line too long, so tell me what your question is.
Hello, Mr. Alex. Good morning. So, my question is, I hold 1,000 shares of MSTC, that is Metal Scrap Trading Corporation.
Mm-hmm.
I got it at 500 rupees per piece. I have 1,000 shares.
Okay.
My question is, should I add more? I'm planning to add more. I just want to see whether it's a good idea.
Okay. Can you very quickly, Ram, tell me what the thesis is and how long do you intend to hold it for?
I can hold it for a couple of years. The thesis is it's a less capital intensive, high profit business, I guess, and it is owned by government. So I thought it's a good idea.
Okay. Let me go across to Samir on this one. Samir, coverage on this, it's about 3,700 crore market capitalization view.
So I'll request you to go to Jatin. I don't have coverage.
Okay, fine. Okay. Unfortunately, Ram, I can't get you a fundamental view on this, but Jatin, can you give us some sense on what the potential upside is? He is in the green right now, so strategy for relatively long term?
Yeah, see, MSTC is showing signs of a trend reversal on the daily charts. In the immediate short term, we are expecting this current up move to extend towards 560 odd levels on the upside. And if that level is surpassed, then we can expect the rally to continue towards 650. So I think at 560, some profit booking is advised, even if it's holding for a long term. I believe that around these levels, we will have some amount of resistance or selling pressure coming in. So around 560 odd levels from an immediately short term, but from an overall long to medium term perspective, we are expecting levels of 650 in the case of MSTC Limited.
Okay, so potential upside is there. The stock is up and about today. Ram, hopefully that gives you something that will calm your mind and put you to sleep. It's quite late where you are. So here's wishing you a good night.
Thank you very much. Bye.
All right. The next one is RVNL. And, I did want to ask this in conjunction with what we were speaking about. But let me go across to Jatin on this one. 470 is the buy price for Venkatakrishnan, and he wants to know whether to hold, average, or exit at this juncture. And Sandeep from Chennai has 1,500 shares at a price of 505. So if you are holding at this juncture, Jatin, what are the levels to watch on the upside for these stocks?
Yeah, see, on the upside, immediately we are expecting levels of 400. And if I analyze the fall of RVNL from the highs, I think it has completed its correction in the longer term perspective as well. So I believe that on the upside, from a medium term perspective, we can also see levels of around 475 to 480 on the upside. So current levels, one can think about averaging if the fund allows, or if he has excess funds. So I think current levels are good levels to even average out, because I think the medium term bottom, I think, is supposed to be in place, and I'm expecting a sharp run up in RVNL towards 475, 480 odd levels. So yes, he can continue to hold and even average.
All right, so that's the view coming in on RVNL. Pradeep from Visakhapatnam is calling in. Pradeep, a very good morning to you. How can we help you?
Yeah, very good morning. Actually, my query is regarding Raymond.
Okay.
I have 100 shares of Raymond
Okay.
at 1857 apiece.
Okay.
So actually, what is the opinion regarding if you want me to hold out or exit at this current time? Because actually the stock is up by 9%, 10% today.
Today, correct. All right. So Pradeep, you bought this from a longer term perspective?
Yeah, actually I bought it for a 6-month horizon, but anyways, I am staying invested. Because
Okay.
actually I bought it in September of last year, 2024.
Okay, got it. Samir, I'll come quickly to you. Raymond Lifestyle, now that it's completely different, how are you seeing its real estate as well as engineering business panning out to be?
So the real estate business opportunity for Raymond is quite strong, right? Given the land bank that they have, the development that they're doing is all being done in phases. As they keep developing it, the value of the land will start coming through. And, given the fact that he doesn't have to go and acquire land, he's just sitting on the land bank, the profitability and the ROEs on those projects are going to be incredibly large. So from that perspective, the real estate business for Raymond will do well. I think one can stay invested. I think the opportunity in the entire real estate space, so we are actually quite positive. We've seen a sharp correction in entire real estate space, be it the Godrej, be it Bombay-based Oberoi, be it the Bangalore-based Prestige, be it Delhi-based DLF, Macrotech, Keystone. All of them have fallen a huge amount over the last maybe 3-4 months. They're down close to anywhere between 33 to 50%. We believe growth opportunity is still strong. The consumer demand is going to come. We believe that housing is something that is going to keep growing over the next maybe 10 years. And these larger players with strong balance sheets will stand to benefit. So Raymond is one of them. So stay invested in it. Again, it's run up today, so I will not ask you to average. But I'm hoping it doesn't correct. But if it does correct, you can add some.
Okay, all right. So that's a comprehensive view on Raymond. Up and about. By the way, there was a little bit of an overhang with regard to the management, and there was an update earlier in the week also that that put some of those. Nawaz
The wife of
has actually resigned from certain and stepped down from certain positions. But all right, I believe Jatin has to leave us. Jatin, thanks so much for joining us this Friday morning, and wish you a happy Friday and a happy weekend. And we'll be back on the other side to talk about more of the questions that you've sent, and I'm sure that you will call us as well. Do stay tuned. Lots more coming up on the other side.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
Welcome back. You're watching Ask Profit. I'm saying that in a very dramatic tone, but then ultimately the show is meant to get you answers to all of your stock-related questions. I believe we've got Sneha Seth joining us on this side of the program. Sneha, a very warm welcome to you. And we've already got Samir, and we've talked about a few stocks. I'm sure that we've got lots more to discuss. Alex is calling in from Kerala. Alex, good morning to you. And how can we help you today?
Good morning, Alex.
Yes. Good morning to you. And how can we help you today?
I am having query regarding Blue Dart. Yesterday I seen regarding that interview with the Blue Dart team.
Okay.
That was nice from your side.
It was quite informative actually. So, but what specifically? You bought at levels of 5,951, which means that you didn't buy too long back, right?
No, I am keeping it for a long time, and I am keeping that range 6,000 to 9,000. I thought of I need a short-term view because I have 10 shares. I thought of buying 10 more shares and keeping 10 shares for long time and 10 shares for to sell in 9,000. How is it that
Okay.
work?
Okay, and okay. So let me go across to Samir on this one. Samir, we did speak to the management, but we didn't get any specific insights into the volume data. He did say that it was better sequentially and things are improving, and he's seeing green shoots. So, but how do you see the fundamentals? What does the business look like to you?
So fundamentally, the business is still very strong. We believe the growth opportunity for the last mile delivery is only going to keep increasing in India as you have more and more people continuing to purchase online. Blue Dart figures in that. Of course, they have the corporate side and all of the other businesses also. But we believe the growth in volume will return as consumption increases. And all of this you're going to probably start seeing from Q1 of next year. In the Q1 results, because the first savings of the tax benefits that come is going to happen in the month of April, right? The end of April. So you'll start seeing from May some increase in spends, and maybe June, July, and then you will see that as that keeps happening and the last mile delivery requirements keep increasing, Blue Dart will do well. The problem, simply put, for Blue Dart is valuations are not cheap. I understand there is operating leverage, and once that operating leverage kicks in, the growth could be quite good. But we need to see the growth picking up quite substantially for that operating leverage to pick up, right? From that perspective, given where we stand today, I'm not comfortable on valuation. I like the business and I like the company, but I would like to see, I'm talking of a 20% correction even after this correction that has happened, where I would get comfort to buy the stock. So from that perspective, I would avoid it. But if you have it, you can continue to hold it because long term, the company will do well, but your returns are going to be very muted.
Are going to be muted because the stock is not cheap, is the view coming in from Samir. All right, the next question is a very interesting one, and this one's for you, Sneha. Nidhi is conducting this show and helping investors, and she's saying that she wants to invest 2 lakhs right now, and she wants an ROI of 20% in the next 6 months.
She's saying thank you for conducting the show. And
oh, sorry. Oh, my bad. Oh, I thought she's all right.
I was wondering what you were talking about,
right.
because I was just going to say if she's conducting a show, hey, Nidhi, we should be there. We'll help you conduct the show in Ambala.
My bad. Correcting myself there. She's asking that she wants to invest 2 lakh rupees and she wants a return of around 20% in the next 6 months. What stocks should she have in her portfolio is the question. Sneha, what's your view? What are the stocks that are looking attractive?
For now, I believe from the sector's perspectively, I like oil marketing companies. And from chart-wise, if we see a few counters which is on my radar is ONGC. Apart from this, BPCL, these are the counters I am looking forward, and for the returns what she is expecting, I think this can be fulfilled by these both stocks by holding it for 6 months or so. So I think one can go in with oil marketing companies, and in fact, if you want a specific stock, then I would suggest ONGC and BPCL.
All right, so ONGC and BPCL are the 2 counters suggested by Sneha. All right, the next counter, Rama Prabhu is calling in from Andhra Pradesh. A very good morning to you. How can we help you? Okay, I think we've lost the caller, but we have the query. Natco Pharma is the counter. He's holding 160 shares, bought at 990 a piece. What's the view like, Samir, on Natco Pharma?
Natco is continuing to launch new drugs and new products. So from that perspective, the growth opportunity for them remains quite strong. We believe the opportunity within India and internationally for the exports, and especially for the oncology, where the Natco Pharma's focus to a large extent has been over the last few years, will continue to gain traction. Again, it's important to see what are the launches that they make over the next year and a half, and if there are any of them substantially large, which are drugs coming off patent, or even where they have applied for the ANDA and where the patent continues, but they can agree with the current patent holder to launch as this first individual person for 6 months, which they've done in the past also. If some of those go through, I think the company will continue to do well. Valuations are on the slightly richer side, but then Natco has always traded at rich valuations, and pharma in general does trade at slightly higher valuations compared, for companies that have these ANDA products. So I think one can hold on to Natco Pharma.
Utkarsh Small Finance Bank is what I'd like to talk about next. The stock is currently trading at 24. My goodness. So this is a stock where our viewer has taken a very large holding position. Vinay is our viewer and he's got 35,000 quantity. He's bought at levels of 30. The stock is currently at 24 or thereabouts. So he's incurring a loss primarily because of the size of his holding in the stock. On the charts, Sneha, what is the potential for upside? Because the stock is up 5%. And what should the strategy be? Is there a possibility that he'll recover his buy price?
Yeah, I think recovering the buy price won't be a very big task for this counter. But looking at the chart structure, because the chart structure or the overall data is quite limited in this counter. From now, I believe if in case it corrects, I think 22 should be acting as a support. On the higher side, any move above 26, 27 would be interesting. There we may see an up move towards his buying level and above that even. But for now, I believe one should be keeping a close watch on the 27, 28 zone. Once we see a strong move above this, then only we may see some buying interest coming in. Otherwise, there are chances that this counter can frizzle out at those levels around 27, 28. So need to keep a close watch around those with a strict stop loss of around 22.
Okay. All right. Ola Electric is the name of the counter we're talking about next. And this is a company that is currently in a bit of a storm with regard to regulatory issues. Of course, the company has sent out a notification and a clarification to the stock exchanges saying that it's not really regulatory issues that it is facing. And we've been bringing you exclusive reports over the course of the last week or so. The question is from Mahesh. He's writing in from Visakhapatnam and he's asking about this because he's bought at levels of 98, which is elevated levels. The stock is currently trading up about 9%, but at 56 or thereabouts. What's the view here, Samir? Would you exit or would you wait for a recovery?
No, I would not exit. We've had this discussion in the past on Ola Electrics. The growth opportunity that exists for the electric two-wheelers is quite substantial. It's a very small percentage of sales of electric as a percentage of total two-wheelers is very small and it's only going to keep growing over a period of time. Ola does have the leadership position there. And what they're doing is they're doing the backward integration where they are going to be manufacturing the batteries, which will allow them to increase their operating margin. And as the volume uptake with the operating leverage, with the higher margin starts picking through, the company will come to profitability. It will take time. Now, the problem is, I guess, why the stock is getting hammered as much as it is. Every third to fourth day, something or the other comes up with some issue with it was with not making some payment to one of their registering companies. Today is with the fact that Maharashtra government has said that they've impounded certain number of bikes because of certain registration problems or regulatory problems. So because of all of these negatives, I think the stock has been under pressure. But we believe the growth is very strong. If they can address these issues and put them behind them, I think the stock has good opportunity to grow. So the fact that he's bought it at 90, I think one can probably advise the viewer to add some more at these levels and bring his cost down. I think you will see probably 70, 75 quite soon, maybe in the next 3 months. What you buy lower, you can probably offload at that 75 and, keep your original value and holding if you want, and then play for the longer term upside.
Okay, so that's a comprehensive view on Ola Electric. Suresh is calling us from Hyderabad to talk about a relatively new listing, Standard Glass. Good morning, Suresh, and how can we help you today? Suresh, can you hear me? Okay, we're losing quite a few of our callers today. I hope that's not an issue with our lines. Do have a little bit of patience with us. In the meanwhile, let me go across to Samir on Standard Glass. If you have an opinion, Samir, based on your smile, I'm not sure if you do, but he's bought at levels of, so he's bought at levels of 142. Okay, then let me ask you this. It is a manufacturer of engineering equipment for the pharmaceutical and the chemicals space in India. And if I'm not mistaken, it has to do with the specialized glass that you would need in this space. Are you familiar with other companies in the space? And which is the other company in the glass space that we often talk about? Sameer, can you remind me?
I also know which one you're talking about. The stock price is around 1,200, if I'm not mistaken.
I'm not able to recall.
By the Patels.
No, Laopala is glassware, that is cutlery and all of that. It's not Laopala.
No, not Laopala. It is. I also forget the name of the company, but it's owned by Mr. Patel.
Yeah.
And they make the inner sheet of the glass, which goes into the chemical, the mixing and the storage units of. I forget the name of the company. It's right at the tip of my tongue as well. But that
glass, is that
company,
it? Sigma Scientific Glass, is that it?
No. It's not Sigma Scientific. I think they're doing one of their shows also right now with Valorem. Valorem is hosting them for their this thing. Anyways, that said, look, the entire chemical space has been struggling. So what I can tell you is, if Standard Glass is catering to the segment of chemicals and pharma, the entire chemical space has been struggling when it comes to profitability because of pricing pressures that have been coming from China. We all thought that the China +1 and the Europe +1 Indian chemical companies would stand to benefit, and a lot of people were putting in capacities. Now the capacities are coming to fructify, but the pricing has not changed drastically. So it needs to be seen how the operating margins remain. Now, given the fact that fresh new capacities will not be put up very easily, given the fact that the current existing ones may not be as profitable, then companies catering to that space who make certain products which are catering to the chemical sector and the pharma sector need not do too well. You might see a bit of a slowdown, or at least if not delay in orders, which could affect the profitability of those companies.
Sameer, there is Borosil Scientific that is also in the space. It got split from Borosil. I'm wondering if you have a view on this one.
That is the Kherukas. I don't have a view on that.
Okay. Let's move on.
All right, let's move on to the next query. Niva from Chennai is holding 250 shares of Sigachi Industries, and her buy price is 52 rupees. She wants to know whether she can add at current levels. She wants a view from a one-year perspective. Sneha, I'll come to you. What are the charts saying about Sigachi Industries?
Now, if you look at the chart structure, it's been quite some time wherein this counter has been trading in a narrow range of 42 on the higher side and on the lower side 34. So that is the range for now. And unless and until we don't see an up move beyond this resistance zone of 40, 42, one should avoid taking a long position, because the chances of consolidation is quite high for this counter. But in case we see an up move above 42, then it would be a buy counter for me. And for that, once we see an up move at least above 42, we can expect 50-55 zone in this counter. So at this point in time, I would suggest avoid. But yes, around 42, one can think of this adding this counter for the target of 50-52.
Okay, this is going to bother me for a while, Sameer. I'm going to try again. HLE glass code, is that it?
No, I'm doing the exact same thing that you're doing, but it's not that one.
Okay, I will eventually get it. In the meanwhile, let's go to Raj. Raj is calling us from Bhubaneswar. Raj, good morning, and I believe your question is on Reliance Industries?
Yes, good morning.
Please go ahead, Raj.
Yeah, so I have I bought Reliance at 1370.
Okay.
I have around 7,000 shares of Reliance.
Okay.
Okay, so I think it's trending at 1280 right now.
Yes, it is.
Yeah, so what should I do?
So can you help me with something first, Raj? Can you tell me, is this a very large portion of your portfolio?
Absolutely.
So what, a third, half, what is it?
It's around 90%.
90%
of my portfolio. Yeah.
Okay, so therefore, it's important for you to understand. All right. So let me go to Sneha first on the technicals. This is a stock that has relatively underperformed, and as large as you can get, Reliance Industries, but it has started contributing. So 1370 is the buy price. At what point do you think it will hit that, and what is the potential upside? And then I'll go to Sameer on this.
if you look at the chart structure, it has, formed a base around 1150 now. And contour has been trading about 20 EMA. In fact, it has managed to surpass 89 EMA on the daily chart. I believe the move can extend at least towards 1320, 1325 for now. Any move above this would be very interesting. For now, I believe one can hold a counter for the target of 1325. Looking at the options activity also, wherein we are seeing decent, attraction in higher strike prices. So I believe the momentum may continue at least towards 1320, 1325. So that should be target. If you want to keep a stop loss, I believe 1230 would be the stop loss which can be maintained.
So, taking oversized bets, or I don't want to call it a bet, but making an oversized investment, it's, of course, financial planners will tell you that you should probably avoid it, have a diversified portfolio. But I know, Samir, that I've asked you this in the past, and you said that holding a few stocks is not necessarily a bad thing. And Reliance Industries, as a conglomerate and present in so many businesses, ultimately, to a certain extent, one can argue that he is diversifying, but he's talking about 90% of his portfolio in one stock. One, is that an okay approach in your opinion? And what is your advice on Reliance Industries?
So let's take each step separately. 90% in any one stock is something we never advise, right? I think that's too high of an exposure to any one thing. Yes, Reliance is relatively diversified company with 3 large businesses, and in fact they're going to be entering the 4th, so you do have some diversification there, but you're still putting all your eggs in one basket when it comes to a group, because if something goes wrong with the group, then you stand to suffer. So I'm not someone who advises 90%. Now, what I will say is it's refreshing to hear someone asking about a large cap stock. If you notice the entire show here, we have pretty much discussed all mid cap, small cap, new listed companies with, where when the markets tanked, you saw these stocks getting butchered and beaten very badly out of shape. Whereas Reliance is down about 15% from the top, which is okay, which is fine, given that it had also run up a lot and there is value unlocking. Now, for me as an investor, I would say, please diversify your portfolio for the viewer, but Reliance is a buy for me at this point of time, from the perspective that there is going to be the launch IPO of the Jio telecom business. The retail venture will start seeing a lot of uptake once the consumption spends increase over the next 1 year. They have the largest retail reach, they have the largest brand portfolios, they have all of that. Their solar space, we're going to see a great expansion where they're going to put in solar plants, and the power sector, you'll see a growth opportunity coming there. And the O2C business is something which is a cash cow, which is going to continue to allow them to do well. We don't expect the GRMs could move up or down, but overall they will continue to do well there. So for a regular investor, please buy Reliance or add Reliance. But for your current person asking the question, please do diversify. 90% is too large in any one company.
Yes, and point well made. All right. Govind Kumar. Yeah.
The company is GMM Fowler.
GMM Fowler. Thank you so much for putting my mind at ease. All right. We've got our next caller. Govind Kumar is calling us from Hyderabad. Karur Vysya Bank is the name of the counter that he wants to know about. Hi, Govind. How can we help you today?
Hi, sir. Hi, Helen. Good morning.
Good morning.
Sir. Yeah, sir. Thank you for my calling. Sir, actually, I have brought 2,000 shares Karur Vysya Bank.
Yes.
Can I add some more, sir? At least 2,000 shares at this price?
2,000 more. And what is the time frame that you have in mind, Govind?
At least 2 to 3 years.
Okay. Relatively quick answer on this one, Samir. In the banking space, is this a good one, Karur Vysya Bank, or would you pick another?
I would pick another at this point of time. Karur Vysya continues to trade at about 1.5 times book, which is not expensive. But then, I don't see a re-rating there. Then you're playing the growth story. I think there are banks which have seen sharp corrections. So as much as everyone wants to tell me that IndusInd is something to avoid, I have a contra view. I believe that yes, this pain point is there for them. It'll get over in the next 3 months. You will see them returning to profitability in Q1 and Q2. And I think when you get a stock like IndusInd Bank trading under book value, it becomes a buy. So I would much rather buy that. IDFC, of course, remains one of our top picks. You are well aware of that. I'm sure you were waiting for me to say that as well. And then I like the HDFC Bank in the large cap if you want to go, and in the PSU, Bank of Baroda. These are the 4 that I would recommend.
All right, HDFC AMC is the next counter. Muiz wants a view on that. How is it looking on charts, Sneha?
If we look at the chart structure, we have seen this counter correcting towards the 89 EMA on the weekly chart structure. And this week, we have seen a decent move, nearly 8% up this counter is. I believe looking at the overall chart structure, the counter can head towards 4,300, 4,350. So that is the level one should be watching. One can maintain a fixed stop loss around 3,800 for now and stay with the long positions.
Okay. It is time now for the rapid fire segment. Sneha, you will not be aware of this. I'm telling you right now, 2 minutes is what we have. And I'll throw as many questions at you and Samir over the course of that time. Do keep your answers as quick as possible. The first one is AU Small Finance Bank. It's for a time frame of 6 to 9 months. At the current market price, does it make sense to enter? This one's for you, Sneha. Sandeepan wants to know. Yes or no?
I believe yes, one can hold it. One can buy it even. The target would be around 560, 570. So.
Okay. Satya is asking, Wellspun Living, would you buy this counter at this current juncture? He hasn't specified a time frame. I'm assuming it's long term. Samir?
No coverage on this one, sorry.
Okay. IDFC First, Vishnu from Chennai wants to know, he is incurring a loss currently. He's bought at levels of 68. Should he continue to hold or book a loss? This is one of his largest holdings. Samir?
Hold on.
Hold on. Larsen & Toubro shares bought by Gul, I believe, at a price of 3,327. Can more be added at the current level? Sneha?
Yes, can be added for the target of 3,700.
Okay. Capital market plays, and this is a Muiz question, it's extended. I know you asked about HDFC AMC, but he's asking about things like CAMS, KFinTech, MCX, CDSL, etc. Samir, any of these stand out? BSE I'll throw in as well.
So CAMS will be a top pick in that space.
Okay. Vijayalakshmi wants to know about Canara Bank at a price of 112. Canara Bank. Technical level is being sought. She's bought at levels of 112. Stock is currently at 87. What should she do?
Is it for me?
Yes, Neha, technical.
So it is a hold for the target of 94 for now.
Okay. Sami Hotel bought at levels of 194, 3,000 shares. Abhishek wants to know, should he hold or exit? Samir?
I don't have a view on Sami Hotel, but hotel sector is positive. I would say if the company's valuations are good, hold on.
Okay. Swaraj Engines, good for long term. Any view on this, Samir?
Yes, continue to hold it.
Okay, all right. Well, that brings us to the end of this edition of Ask Profit. To the both of you, Samir as well as Sneha, thanks so much for joining in and wish you both a very, very happy Friday.
Thanks, everyone.
All right. And that brings us, as I said, to the end of this edition of Ask Profit. Hopefully the market ends on a good note and you have a great weekend. We will see you on Monday to take more of your questions. If we missed it out, well, apologies. And I hope that the questions or the stocks that we discussed today have helped you in some way. From me and myself and the team that put this show together, thanks so much for watching. This is NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we